Yo, what's up everyone? In this video, we're going to be diving deeper into the actual construction of the Elliott Wave Theory patterns for the current price action we have been observing on the macro, but now we're going to try and narrow it down even further on the micro timeframes to help build our bullish or bearish thesis. I hope you guys have been enjoying these non-stop updates for Bitcoin. Once again, if you guys are liking these videos, please do give a thumbs up and also please make sure to subscribe to the channel if you haven't already. Now, starting off with our primary leading diagonal idea that we have been discussing for the past videos, let's try and construct it and see if we can find any faults with it, or simply put, let's find the pros and cons. So what is the leading diagonal first of all? In the Elliott Wave Theory, the leading diagonal is a 5-wave motive pattern that occurs at the start of a new trend, either to the upside or downside, in this case to the upside, because we are looking for a bullish continuation after the assumption of a larger correction has completed prior to this. And in this case, we have assumed that the wave 4 has completed, as you can see in the green. It often appears in a wave 1 or wave A, in which is part of a lettered corrective phase, and since we aren't looking for a lettered corrective wave, we are narrowed down to the wave 1 as we are looking for a bullish continuation. And unlike a standard impulse wave, which is 5 waves, the leading diagonal can have overlapping wave structures and tends to contract in nature, forming a wedge-like shape like we are doing right now. So if we take a look at it, I actually drew up the pattern so that you guys can refer to it. Let's take a look at it. Again, a leading diagonal is going to be putting us into a wave 1 or wave A position, setting the direction of the actual trend of the larger degree. So in the leading diagonal, the subwaves can either follow a 5-3-5-3-5 pattern or with a 3-3-3-3 pattern. And this is the more common one, the 3-3-3-3 pattern. Pullbacks in leading diagonals are typically very strong and often retrace around to the 61.8 or the 78.2% before the trend actually continues. But since we aren't at that stage, we are looking for the 5th subwave right now. That's the current stage where we're at, to the upside. This is basically where we're at. We're almost done with this whole contracting variation that we have been talking about since the beginning of the subwave 2 from a few videos ago. Now, the most important thing about diagonals is that they should more or less be creating a proper contracting look when in the process of creating one, as that gives more confidence to the actual pattern being validated. But it doesn't have to necessarily, as long as we're still working in the confinements of the actual rules and guidelines of the diagonal. But again, even if they have the proper look, they also tend to fail a lot of the times. So that is something to be very cautious about when utilizing these patterns into your Elliott Wave Theory toolbox. Now, why do I also believe that this idea is still intact, however, while it's still being interchanged between the flat idea that we have been discussing in our past video as well? There's considerable evidence from the fundamental side of things, first of all, that a lot of people aren't seeing. There's 2 of them, and I'm going to discuss it right now. So if you guys aren't following me on social media, I posted some news that starting this Friday, we are set to see 60.2K BTC, which is going to expire within the options market with a max pain price of $61,000, which is above us, and a PC ratio of 0.61. Now, the closer the price gets to these levels, the $61,000 levels, the more likely is that the options will expire worthless, which benefits all of the option sellers. Now, it's very confusing, but let me try and explain it very simply. The more important thing is the PC ratio right here, this 0.61. The lower the PC ratio, it suggests that traders are a bit more bullish. So the overall market might see an upward bias unless the broader market conditions turn negative. So the PC ratio, simply put, shows how people are feeling about the market, and it compares the number of bets that the price will go down, which is the put options, to the number of bets that the price will go up, which is the call options. So if the ratio is below 1, it means that people think that the price will go up. And right now we're at 0.61, which is considerable considering that less than 1 is a very bullish sentiment. Now, the max pain price in itself, the $61,000, is the price where the most options, which is the bets on the price that's either going up or down, will become worthless. As you can see right here, this is the max pain price at $61,000. And it will become worthless, and it will cause the most financial distress or loss for those who place those bets there. This price level is extremely important because it often affects how the actual price will move as the expiration date gets very close. And right now, we're only 3 days away or 2 business days away from that level right there. So as we're trading below $61,000 right now, especially with the PC ratio below 1, we're at 0.61, there's a very good chance that the price also may move up. Now, that's just fundamentally. Now, we also have another interesting CME gap that's being created or has been created. Again, another CME gap right above us, ladies and gentlemen, and they have a tendency to fill, right? As every single gap has been filled since the past few months or so. Every single gap has been filled, and I don't see it any different this time. I do believe that the CME gap will fill, and coincidentally, that's leading us around the $61,600 level as well. So that gives us a little bit more confidence that the price action might actually continue up, and we can still be confident that this leading diagonal might come into play, especially that we have a lot of corrective moves in play right now, and we're looking for the final 3-wave move to the upside, either as a simple zigzag or a multiple zigzag as a WXY complex correction. So that would finish off finally the 5th subwave of that primary wave 1, and then we'll be looking for that wave 1-2 pullback of the primary degree in yellow, which is going to be the larger pullback. But at that point, if in hindsight we have a confirmed leading diagonal, then we can really take more confident approaches about where to position ourselves in terms of finding better positions for the upside for a larger wave 3. So we have the 4 necessary components rather of the current leading diagonal. Right now, it is a little bit subjective in terms of how we can be seeing this. So if we zoom in and we actually try to find the price action on how we can fit this as a 3-wave move, right now, there is a lot of ways we can count this, but personally, how I'm seeing it right now is a possible WXY. Why? Because we have a leading expanding diagonal going to wave A, B, and then C. Now, this is all overlap, so that's why I have this leading expanding diagonal going into this wave A, and then we have a short wave X, and then this move here, 1, 2, 3, 4, 5 into a wave A, B, and then this is the impulse move for this wave C. That brings us also to the 261.8% for that wave C extension against this wave A. So that partner leg is really extended, and that is considered our wave C. Now, is that wave C going to be turning into a wave 3? Is that a wave 3? That's something that we're going to be discussing in the flat idea. So there are some pros and cons to this, whether you see this as the impulsive move to the downside or part of an impulse move or a corrective move entirely. And we're now still working in some kind of zone for some solidity for a bottom that we may be working for more upside, because this diagonal idea is still valid. This validity is the most important thing, and until it's invalidated from this red line, then we still have to continue to work with this idea. Now, there are 2 variations to this idea. Again, this idea as the contracting variation is pretty much at the peak validation. If we do break this previous low, we're going to start seeing this move into the territory of a possible expanding diagonal, where we see, again, with the name, hence the name, expanding characteristic. We're going to be looking for a pretty long wave 4, and then that's going to be against this wave 2. And similar for this wave 3, we're going to see a wave 5 that's going to be longer than this wave 3, essentially kind of the opposite of what's happening in the contracting variation, where we're looking for a shorter wave 5 against this wave 3. So that is how we're going to be seeing this leading diagonal come into play. This variation is very important. It's not invalidated until we actually break this sub wave 2 from this red line, and until it does, we still could be working on this idea entirely. What if we are working in this as a wave A, very long wave A, short wave C? That's also a possibility that I also explained in my primary analysis from the previous video. So we're just looking for a 3-way move up, and that's how we're going to be completing it. So that's how the leading diagonal works, ladies and gentlemen. That is currently how it's being constructed, and maybe you guys have a little bit of information from my brain to your brain, and that's how we can be constructing it. Hopefully that's a little bit more convincing. Now, there's a flat idea now. What's the flat idea? Still working on a possible wave 1 of the primary degree and primary 2 of the circle right here. Now, what's important about this idea is that, again, we're working in a hybrid scenario. If we're not seeing this as a possible ABC or WXY to the downside, we have to alternatively see this as an impulse move to the downside. Now, since we moved extremely swiftly to the downside, this gives the the flat idea we have here a little bit of a drawback, because we should have been looking for a cumulative or transitional waves for the waves 2. And as we accumulate longer for these wave 4s, they become less likely for an impulse to continue to the downside. So we're going to be essentially looking for a strong fifth wave to the downside to follow suit very soon if this wave 4 is now starting to come to completion. In fact, we can even say that this wave 4 is looking like it's completed because it does look like a 3-wave move to the upside. So if this fifth wave comes to the downside, we are very close to what could be the possible running flat zone area, which is not creating a price extreme below this termination of point wave A. We created this price extreme of wave B, so that leaves us with only two flat options left, which is the running flat idea and the expanded flat idea, which puts us into two different zones as indicated by this green box and this yellow box. So what is the current way to count this? We have a possible 1, 2, 3, 4, and then 5, which is going to be completing our fifth wave. But really, if we want to be breaking these levels, we really want this fifth wave to be extended as well. So there is that drawback where, okay, we have to extend our wave 5 now in order to even fulfill that possible expanded flat zone. Now, that is why this running flat idea is also coming into fruition, because if we do find a bottom for this fifth wave, it still puts us above that termination point of wave A, and that puts us into the running flat zone, which means that we created a wave 1, A, B, C, and this wave 2 is now complete and we're moving to the upside. So that's also working in hybrid or overlapping with that diagonal idea in the case we do actually move up. So if we do move up from these levels, we're going to be narrowing it down to those two ideas of the diagonal or the running flat idea. Now, what if in the case we come down even further, the diagonal idea gets completely invalidated? Again, remember that subwave 2, if that gets invalidated, the flat idea is the only remaining option, in my opinion, for this possible wave 1, 2. So if that's the case, we're going to be looking for it's hard to say if we're still in a wave 3. Really, we want to be extending our waves 3 as much as possible, where the price moves too fast, too soon. And then we want to be creating either some kind of diagonal idea for the end of the fifth wave or the C wave. Usually we see diagonals occur the most within the C waves of a flat. So that's something that I would like to see, where we see diminishing volume as we start to come down here and we create some kind of diagonal. That is also a possibility that I'm also going to be monitoring. So please keep a lookout on that as well. And then we also have the possibility of just continuing down for that fifth wave, which is just a normal assumption anyways, as we want to be continuing to complete this 5-wave move to the downside. So again, there's only two things that we can be looking at it from: this running flat idea and this expanded flat idea. These two zones, this green box and this yellow box, are just the levels that you want to be looking at for how this ABC is going to be completed. Now, what I like about this idea for the flat specifically is that we did move down quite swiftly. So there is the pros and cons of that. We moved too swiftly and we're starting to already consolidate for this wave 4. So essentially we want to see another strong movement to the downside to complete a fifth wave of at least this running flat idea, so we can at least confirm something is happening within the markets that we may be working to the upside. If not, we're going to have to find another way that we may be working in the extension of a wave 3 rather than finishing up a wave 5, because this is going to be too long for wave 5 in my opinion. And especially if we hit that 61.8 and the 161.8 based on the trend-based Fibonacci extension of this A to the C, then we're going to have some problems running into that as well. So that's a problem. When you move too fast, too soon, that is what happens usually. And that's also part of the characteristic of the diagonals. When you move too fast, too soon, you're going to start creating overlaps and find momentum indicators, finding weakness, and also starting to find bullish divergences, which also makes it very, very possible that this is going to be a continuation to the upside. So ABC, ladies and gentlemen, this is what we're looking for. Again, that's the second idea. And then the first idea is also still working with that contracting variation or even possibly the expanding variations. As you can see, a lot of these ideas are overlapping. I'm doing my best to try and consolidate all of the fundamentals. Like I've said, there's two fundamentals, such as the options expiration for this Friday, and also we have the CME gap, which is right above us, that leads us to the 61.5K levels as well. So this diagonal idea also fits. And then we have the flat idea. But most importantly, as you can see, everything is within this confined zone, ladies and gentlemen. This is the most area of confluence that we are at right now. As you can see, it's very messy, but these ideas, especially with the primary wave 1-2 pullback of the diagonal, it still brings us back to these levels anyways, right? So it's just either a move fast right now, we come down and then go into the expanded or running flat and we just get out of here, or we work higher first and then another major pullback so that we can set pace and get ready for the next major move to the upside. So I'll be making sure to monitor and also updating those ideas. Remember, if you guys are interested, please subscribe to the channel if you haven't already. And also please like the video because it does help these videos and I pump them out like crazy if you guys show the interest. So hopefully that was helpful. Thank you very much. I'll see you guys in the next video. Bye-bye.